the general journal. In order to introduce this concept, we're going to do another activity. For this activity, you need a pen and some paper, if you don't already have the transactions, and you will also need 7 different envelopes. If you don't have envelopes, you could use 7 different bowls or any kind of container. What you're going to do firstly is label your 6 envelopes or containers with the different journal headings that you know so far. The first 2 will be for the cash book, 1 for the receipts that would be debited and 1 for the payments that would credit bank. You will then use your other envelopes or containers for your purchases journal, sales journal, purchases returns journal and sales returns journal. The 7th one needs to stay unlabeled. We're going to consider each of the given transactions. If you don't already have the transactions in front of you, you need to have a piece of paper on which you can write down the accounts to be debited and credited together with the number of the transaction. For each transaction, once you've decided what you will debit and credit, place it in the correct envelope to indicate where it should be recorded. Remember that your journals are used to summarize transactions, so all the transactions that are similar will be put together. If you have no idea where the transaction should go, then you will put it in the unlabeled envelope. Let's have a look at the first transaction. Cash sales of merchandise, 2,400. This is a nice simple one. It would go into the cash book because cash is involved. Because it is cash sales, it means that you are receiving money, so it would be your receipts. Out of interest, your other account would be sales. So for your debits and credits, you're going to debit your bank, which is why we know it's going to go into the debit or the receipts of the cash book, and the contra account, you will credit sales. Number 2, credit sales of merchandise. In this case, instead of selling for cash, you are selling on credit. For this reason, instead of debiting bank, you would need to debit the individual customer's account while crediting sales. Because you are going to be debiting the individual customer's account, this means you'll need to put this transaction into the sales journal. Number 3, trading stock bought for 3,300 Rand, paid by check. This transaction involves purchases paid for by cash. So therefore you would debit your purchases expense and you would credit your bank. Because you are crediting bank, it means that this will need to go in the envelope for your cash book payments. Number 4, credit purchase of equipment. If you are buying equipment on credit, obviously equipment is an asset that is increasing, so you must debit equipment and you would need to credit the supplier's account. Because you are going to credit the supplier's account, this means you'll need to put this into the purchases journal. Remember that the purchases journal is not only for purchases of trading stock or merchandise, but of anything that you buy. 5, stationery bought on credit. You will need to debit stationery as an expense that is decreasing equity, and at the same time, because it was bought on credit, just like you did with number 4, you are going to want to credit your supplier's account. Again, this transaction will join number 4 in your purchases journal. 6, goods returned by a customer as they were the wrong size. In this case, your sales is going to decrease and therefore you would need to debit it because your equity is getting smaller. Your customer or an asset is also reducing and therefore you will credit the customer. Customers, remember, are going to be credited in the sales returns journal. So that's where number 6 will go. Number 7, damaged goods returned by a customer. This is exactly the same as number 6, except for the fact that the goods were damaged. However, at the end of the day, the result is still the same. What it means is that your sales will decrease, so you would debit sales and you would credit your customer's account. This transaction will join number 6 in the sales returns journal. Number 8, stationery returned to a supplier. If stationery is being returned, it means that your expense is actually decreasing. You have less of an expense. This double negative means that equity increases and therefore you would need to credit your stationery. At the same time, you owe the supplier less and therefore the supplier's account will be debited. Number 8 will need to go in the purchaser's returns journal. All of these transactions so far should be transactions that you are familiar with and simply be a little bit of revision of the work you've done over the past few weeks. Number 9 gets a little bit more interesting. Please excuse my spelling error there. The customer paid an account of 200 Rand with a 5% discount allowed. Now there's two parts of this. The first part is your customer is going to pay the account of 200 Rand. However, he is not going to pay the full 200 Rand. Remember that if a 5% discount is allowed, that means he's going to pay 10 Rand less. This means that the amount that is going to affect bank will actually only be 190 and discount will be the other 10 Rand to make up the 200 that will be reduced from the customer's account. However, all of this will still go into the cash book on the receipts side, even though 10 Rand doesn't actually affect bank. Remember, we'll just put it into a discount allowed column. Number 10, sent a check for 1720 to a supplier and received 80 Rand discount. This is very similar to number 9, it's just working the other way round. We are paying the supplier 1720, so this is the actual cash amount. The discount is 80, and that means that in total, the supplier's account needs to be reduced by 1,800. In the same way as number 9 went into the cash book receipts, number 10 will go into the cash book payments, even though not all of it was actually cash. Number 11. A customer owing 77 Rand is insolvent. You received 55 Rand. Well, if you received cash, that's pretty straightforward. You'll put that into the cash book receipts for debit bank and credit the debtor. However, what about that remaining 22 Rand? Well, this part is a little bit more problematic. Do you have any ideas where it could go? It can't be cash, so it can't be the cash book. It's not a credit transaction where you bought or sold on credit, and neither is it a return. This is a transaction that will have to go into your unlabeled envelope. Number 13. The owner paid his private telephone account using a business check for 160 Rand. Even though he paid his private telephone account, which obviously must be drawings that will be debited, it is still the business bank account that is being credited. And as such, this will be entered in the cash book on the credit side as a payment. Number 14, however, is a little more interesting. In this case, the owner took goods for his own use at cost for 210 Rand. However, in this situation, the owner hasn't taken cash, he's actually taken trading stock. So hopefully you can see that you would want to debit drawings as we did in number 13, but instead of crediting bank, hopefully you can realize you would want to credit your stock or your purchaser's account. So the problem here is that it's not going to fit neatly into a cash journal, nor is it going to fit into a sales or purchases journal, nor into one of the returns journals. So what can you do? That's right, pop it into the unlabeled envelope. Number 15, charged 10% interest on a customer's overdue account of 360 Rand. In this case, the customer was supposed to pay some time ago, but hasn't. And in order to try and encourage him to pay, you're going to make him pay a little bit more than he initially should have. This is allowed, obviously within reason. Interest is often charged on overdue accounts. Obviously, you will debit the customer's account because he owes you more money, but what do you credit? In fact, what happens here is that you are going to create an income account for the interest that you are due to receive on those overdue accounts. However, if you think about what journal this will fit in, there's no easy journal. If we go through the process that we did before, is cash involved? No. Is it a credit sale or purchase? No. Is it a return of a credit transaction? No. So this will also go into your unlabeled envelope. Number 16. A customer's cheque for R105 is returned by the bank as he didn't have any money in his account. I know the concept of a cheque is getting a little bit outdated, and maybe you've never even seen one. Quite simply, a cheque is simply an instruction to the bank to pay somebody a certain sum of money. And in the days before internet and internet banking and computers, this is how money changed hands very commonly when you didn't want to use cash. However, sometimes what would happen is that somebody would write a cheque or an instruction to their bank to pay the person whose name was on the cheque, but they had no money in their account. In this case, the bank would just turn around and say, "So sorry, Mr. Joe, you can't have the money because there's no money in this account." And we would say that the cheque bounced. So in this case, if the money is not going into this person's account, or in this case, a customer paid us with a cheque that was returned by the bank, so the bank said to us, "Sorry, the customer has no money," that means that originally we thought we received money and we would have recorded it in the cash book on the receipt side. But now we didn't. So therefore, he actually owes us the money that we reduced, so we need to debit the customer's account again, and we need to credit our bank account because we actually do not have the money that we thought we had received. Because we credit the bank account, even though this is an unusual transaction that you haven't yet encountered perhaps, it is going to go into the cash book because cash is involved. Number 17. Stationery bought for R75 was incorrectly posted to the purchaser's account. This error must be corrected. At the end of the day, your profit would still be correct because both purchases and stationery are expenses. However, it's going to make a difference to what your gross profit looks like. And it's also very important generally just to make sure that all your expenses and incomes are correctly recorded, so that if any stakeholders are looking at the statement of income, they are able to correctly identify the reasons for profits increasing or decreasing. And therefore, you do need to correct this error. So, if the stationery was actually recorded as purchases, we need to fix it. We would need to debit the stationery account because this is the account that actually was affected, and we would need to credit the purchases account because purchases was not affected and was previously debited when it shouldn't have been. So a credit will cancel this error out. Is there any journal that we know so far that we can put this in? No. Cash is not affected, it's not a credit sale or purchase, and nor is it a return. This, therefore, will also join the others in the unlabeled envelope. Number 18. An invoice from a supplier for repairs was entered as R65 instead of R56. Just like number 17, this is a mistake that happened. And although there are actually two ways you can fix it, because, in fact, no, you can't go and fix it with a debit or credit note because quite simply the invoice was correct. It was your mistake, not the problem on the actual source document. And therefore, you will also need to pop this into the unlabeled envelope because you can't put it in a returns journal. Number 19, pay general dealers by check for stationery 46 and equipment 66. This will simply be debit your stationery, debit equipment, and credit your supplier's account. In other words, it will go into your cash book payments. Goods bought on credit from George Brothers for 300 Rand were incorrectly posted to G. George's account in the sales ledger. In this case, what's going to happen is the original transaction was shown correctly on the source document, but because it was posted incorrectly, yet again, we will put this into our unlabeled envelope because there's no journal that we can use to simply fix this problem. Do you notice that some of the transactions did not fit neatly into any of the existing journals you've already learned? We pop them into your unlabeled envelope or container. The general journal is the journal that we are going to use for these transactions. Interestingly, they are not even similar to each other. The only thing they had in common was that they didn't fit in anywhere else. Personally, I sometimes like to think of it as an orphanage for the lost transactions that don't have a nice home with similar people. So the general journal is going to be used where a transaction does not fit neatly into an existing journal. Rule of thumb, if you do not know where it goes into the general journal. Authorization is going to be needed for the general journal entries in order to avoid misuse or fraud, just like was needed for your petty cash journal. Although there's no cash involved here, like petty cash, the general journal could easily be used to cover up problems that take place, or errors or fraud. And for that reason, it needs to be authorized, just to make sure that all transactions are correct and above board. The general journal shows each account that is going to be debited and each account that will be credited with an explanation that is known as a narration. This is necessary because there's not always a source document to work from, as you could see, specifically with those errors that needed to be fixed. And therefore, a narration is going to be used to explain what is happening. The amounts are then posted individually to the general ledger accounts. There's very little or no summarizing that can take place in the general journal because usually all the transactions are completely different from each other. Typical general journal transactions will include those that you've seen now. Firstly, your bad debts. This is where a debtor cannot be traced, you're not able to get the money out of him in any way, and the debt is then written off as an expense. Note, however, that if at a later stage you are able to find this customer and he pays you, which will take you by surprise, because cash is involved, this transaction will be recorded in the cash book, and it's not going to affect the customer's account because your customer's account is being removed completely when you write off the bad debts. Another typical transaction is where there's drawings of stock, where the owner might take goods for his own use. This obviously affects drawings, and it could affect merchandise or purchases. Similarly, if he decided to take an old computer, you could say debit drawings, credit equipment. There are a variety of transactions that could be used over here. Interest on overdue accounts will generally also be shown in the general journal, as well as all the corrections of errors. It's very easy to make mistakes, and then to fix them, you will have to go and do your general journal. It's very easy to get confused when you are correcting errors. This is where I like to use T accounts. What I do is I enter the T account as it should have happened in one color, and then I show what actually happened above the line in a different color, and then you can easily see what do I need to do to make it from the incorrect thing that is there to the correct thing that it needs to be. And then your debits and credits will actually jump out of you quite nice and easily. T accounts are a wonderful tool to help you understand what is going on when you get a little bit confused. Hopefully that will help you to understand the concept of a general journal a little bit better. And that concludes this section of sources and recording of information in accounting.